and gentlemen, let me tell you now, before anyone else does, if I haven't been obvious enough here on this channel, something big is coming for Tesla stock and broader markets. Look at today. Tesla stock did very well, outperformed the markets by a magnitude of 50x or so. At least at one point, this did fluctuate, but a massive outperformance today. For sure, there was good news here and there, but nothing that really explains that kind of outperformance. I've been speculating for a while now that someone may know something about this meeting happening over this weekend, that there could be some really good news on US-China relations. And here in this video, I will break down exactly what that could be and how this could impact our markets and specifically Tesla stock. Let's also take notice. Tesla closed above its 200-day moving average today, which is a critical level. It has not closed above its 200-day moving average since this crash started back in March, okay? You've gotten to your 200-day moving average many times, but you failed to close above it, okay? You've gotten rejected at this level 1, 2, 3, 4, 5, 6, 7 times before today. The 8th time, you broke out above and closed above. It's a very, very good sign of what is to come. And I do think it's going to lead more investment into Tesla, more positioning into Tesla stock. And we'll discuss all of this here in just a moment. But first, I do want to share this clip with you from CNBC because this individual has a very interesting perspective on China. She actually thinks that the US could hold out longer than China, that China really wants to get this situation resolved because the Chinese economy is built off of two things: real estate expansion and exports. And right now, the real estate market's crap. It's been crap for years, okay? And now their exports are getting worse. That China cannot afford to not get a deal done or not work out some kind of pause. That's what I think comes out of this weekend, is ultimately a pause. I'll talk about that a little bit later on throughout this video. But she just spent the last 3 weeks or so in China and says you can actually notice a difference in the Chinese economy today versus where it was at previously. Now, if you don't care to listen to this perspective about China, I think you should, then just skip the clip. It's about 5 minutes long, so it is moderately long. And then we'll just get into markets and Tesla and all of that afterwards. But first, take a listen for those of you guys that want a little bit more perspective on this China situation.
U.S. Trade Representative Jamieson Greer will meet their Chinese counterparts in Switzerland this weekend for trade talks. There is a first sit-down that this will be taking place since President Trump hit 145% tariffs, hit China with 145% tariffs. The president saying that he expects substantive negotiations this weekend. And joining us right now to talk more about it is Michelle Carusa Cabrera, MCC Global Enterprises CEO and a CNBC contributor. She's just back from nearly 3 weeks in China as part of a Brookings foreign policy delegation. And Michelle, what'd you learn on the ground there? Were you able to get a real view of what people in China think about this?
So a couple of things. First, the economy's weak. There's been deflation. Things are so cheap compared to I think all of you went to China during the heyday. Yeah. Difficult to get a hotel room, everything expensive. That is not the case anymore. The other thing that surprised me was not one bad word about President Trump, not from people on the street, not from people in the government. They were very quick to criticize Joe Biden. Mm-hmm. I think that's because Joe Biden's not in power anymore, so that's easy to do. But I think there's also this expectation that Joe Biden was going to be different on a China policy.
But he kept all of the tariffs in place.
Introduced export controls, right? So they're discovering that the attitude towards China is very bipartisan. But I think
from the United States having a strong kind of hawkish.
Absolutely.
There's no undercurrent of not liking Xi yet. Is there that we're hearing about?
I got no evidence of that. Nobody referenced.
I'm not blaming him for any of
that. You think that they would say that to a Brookings delegation?
No, I know, but no body language, no
Nothing.
anything.
No.
Did you
And they
think
really can't.
your hotel room was bugged?
I worried about that, sure.
Did you bring a separate burner phone?
Of course I did. I brought separate burner phones and stuff. So, by the way, I mean, it's like if you want to go on vacation, it's extremely cheap, okay? Except for the hurdle of having to replace all your technology.
It really looks bad over there, like the economy.
I mean, it's relative, right? So, if you went back when the growth was crazy and the cranes were everywhere, things were more expensive, it was harder to get things done, harder to get into hotels and things like that. Now, you're in the beautiful hotel in Beijing and it's very quiet in the lobby, et cetera. There's just less to do there because their economic wounds, remember, are self-inflicted. They're starving the private sector. Right, and as a result of starving the private sector, they do overinvestment in real estate. They subsidize exports, which is why their consumers don't have the level of consumption that we would like and would help, balance of payments in the world. So, you see all of that really play out there. Now, because of CNBC, I've traveled to most of the great autocracies in the world, and I would say it's the one that, except for North Korea, for example, that's where you're going to see the far most Gucci, Prada, et cetera. There's commerce there for sure in a way that you don't see in Tehran, that you don't see in Cuba. It's not like that. But no, there's no evidence of discontent, but I didn't expect to find any.
So Chanos used to come on and talk to us about the ghost cities that were there, the
And
buildings
how he'd
that they
never
were
go over there.
15, 16 years ago.
I wouldn't go, I don't think.
I've said enough things on there.
If you ride the bullet train from Beijing to Shanghai, which I did, which, by the way, compared to Amtrak is a really incredible experience. You see those places, all this massive growth that happened along that corridor. That's obviously not. Now, the other important data point, I mean, there's a reporter there from the FT who's done great work looking at the restructurings there, and especially when it comes to real estate, and the recovery rates on the restructurings that they've done 0.6 cents. I mean, that is horrendous.
So not even pennies on the dollar,
not even pennies on the dollar.
Right.
Okay, and those are restructurings done out of Hong Kong, right? Not out of the mainland. And so they've got issues. Now, they've got capital. I'm not predicting their collapse. It's just when it comes to leverage, I think we have more. They have an economy that has been reliant on investing in real estate and exports. Real estate's done.
That's what they have,
and exports.
but we have to respond to press criticism and the suffering of our people. They don't have to do any of that.
The pride and ego are rather large.
Right. But
we have more leverage, but she doesn't have to be reelected.
That is his one point of leverage. He doesn't have to answer to the markets, and he doesn't have to answer to the
if they're
to the voter.
suffering, doesn't have to care.
It doesn't matter, right? So high levels of unemployment.
What is more? We obviously so much more do we use than we export there.
Here's the one thing I would say is that. Remember, in democracies, you have your fights out loud and in public. You don't think the knifing, in the back of other people is happening over there? Of course it's happening in there. It just happens behind closed doors, right? And those battles are happening there as well. We're just not privy to what's...
Who can last longer?
Oh, I think we can last longer.
We can.
Yeah, we have a much more
Even though they don't care what
economy.
happens.
We have a much more dynamic
I know,
economy.
but they don't have to worry about the well-being of the populace. Do they? Not yet.
And
they're used to it.
Until a certain point, until you do, right? Remember how we turned on a dime when it came to COVID, right? They weren't going to, they had the lockdown, then there were protests, boom, disappeared the next day, right? So,
but they did go through that for a lot longer.
Right.
So what, you think anything happens this weekend? We go to 50.
Oh, I think the message this weekend is that when it comes to the markets, we are now in a period of de-escalation when it comes to trade rather than escalation.
Mm-hmm.
Right? The market's priced in the worst.
Are they going to be eager to get to that point so we can bring things back down?
Oh, I think both sides are eager for de-escalation, for sure. The bigger issue, I think, for the United States is what is our goal here? We have national security concerns, and they are connected to trade. How are they going to bring those two issues together without all what we saw happen in April?
Keep in mind, I've been under this view for a while now, almost 2 weeks, that you're going to get a pause on China tariffs soon. I've been under the view that you're going to get a pause on China tariffs before negotiations actually start. Now, that could be kind of the thing that comes out of it, right? Maybe we get some progress. Maybe we get a pause. Okay. But it wouldn't surprise me if we had a pause tonight, a unilateral pause or a bilateral pause between us and China. Okay, we all pause our tariffs. That would be very positive. I think the markets have kind of been expecting some de-escalation, maybe some kind of pause for the last couple of weeks. And I think that's why markets have recovered quite a bit. At the very least, you could say things have not gotten worse in a while. Maybe is the reason why markets have recovered. Nonetheless, I do think a pause and ultimately a deal is great. Okay. Now, the framework of what a deal is going to look like could actually be possible tomorrow. Okay. With this meeting. Because why? Trump wants China to open their markets. So all China has to do is say, hey guys, we will open $100 billion of our market for the US, okay? 200 billion, whatever the number is. And we will encourage consumers within China to consume. Scott Bessent has said that China needs to be upgraded from a developing nation to a developed nation, that China needs to take their share of consumption in the world, that they just can't be the exporters of everything and not consume nearly as much as other nations, okay? And Trump today said that China needs to open their markets. It seems like it's pretty clear some, as Trump says, substantive changes or progress could come out of this meeting tomorrow. I think like next week, whatever happens this weekend, like that's going to move markets next week. That is essentially the big catalyst, okay? That's going to drive the next 5% higher or 5% lower. And let me tell you now, if we get a pause on China tariffs or the framework of a deal, probably with a pause as well, coming at the same time while negotiations like work themselves out, that dramatically reduces the odds of a recession. That dramatically reduces the inflation risks. And it really helps the Fed's case in actually being able to cut rates. So rate cuts, less inflation, less odds of a recession. 3 great things for markets. But the fourth that a lot of people aren't talking about: lower taxes, lower corporate taxes, deregulation. Okay, these are the things that markets were optimistic about in January and in February. That part of the piece of the Trump story could start to come back into focus for investors. And again, I personally think this is going to send Tesla stock into the, mid 300s potentially. The 100-day moving average is at $326 per share. You could go as high as the 360s, in my view, from a technical perspective. Probably find a trading range between the 340s, 330s on the lower side and the higher side around the 350s. That's my expectation. Now, for the broader markets, on a pause or some kind of framework for a deal, this could actually send the markets back to 600 on the SPY, which would be upside of about 6.5% from here. I think it could be a pretty violent rally if that happens. And I think a lot of the volatility today, the downward pressure on broader markets, whereas certain stocks, a lot of stocks actually did well today, is just sheerly because of the uncertainty. Because we could move so much coming Monday that people really have to kind of finalize, their trades and their positioning. And that did means some depositioning. I think maybe some retail investors that have been buying the dip took a little bit of profits. Hedge funds shorted a little bit before this meeting because you just never know what's going to happen. The worst case scenario would be no pause, no progress, no plans for future talks. Some kind of argument broke out at the meeting. And God forbid, like a physical altercation. Okay, that would be like the worst case scenario. In that event, you probably have some kind of like Black Monday, right? Just to be honest, right? If there was like a physical altercation, because the consequence of not getting progress this weekend could quite literally be the difference between having a severe recession this year or not. Like, there is a lot on the line here, and that's why I think markets are going to move a lot. Now, I'm optimistic that both sides probably already have something planned out now. They probably already have a planned announcement for a pause on tariffs, probably tonight, if not after the meeting tomorrow. Like, don't be surprised, Saturday afternoon, oh, U.S. pauses tariffs on China for 90 days. Talks went good. Talks of opening up markets in China and blah, blah, blah. Like, don't be surprised if that happens. If that does happen, stocks are going to do very well on Monday, especially Tesla. And I think that's where some of the outperformance came today in Tesla. You did have other good news as well, but I think some people are getting ahead of the positive announcements that could come out this weekend. So let me know your thoughts on this down below in the comment section. Ladies and gentlemen, have a fantastic rest of your weekend. We will keep you informed of everything that happens. So subscribe to the channel if you have not done so already. Thank you for watching. Have a great day, and I will see you in the next one.